Good afternoon, everybody. Jake Royall coming at you again from Santa Barbara, California. How's everybody doing today? Thursday. That means we've gotten 4 trading days in. Hopefully everybody's having a good week. How'd everybody do? What's going on out there? Okay, so Michael, motorcycle, and Ron something that rhymes there are on their motorcycle adventure for this week and 2 more weeks following, at least 1 more week. So this will be the 3rd week in a row that I've hosted the webinar. I'm supposed to do it for 4 weeks, possibly for 5. I don't want to give it back to Michael now. I'm really starting to get into the flow of this thing. I really like doing it. Been having some good feedback. Hopefully everybody will enjoy the presentation today. I'm going to start out by going through some blah blah and some yada yada. A little bit more than blah blah and yada yada. It's what this software is, why it was invented, the thoughts and philosophy kind of behind it, and various other whatnots and so ons with a side of possibly shenanigans. I don't know. Let me close this poll down. Looks like 80% of you here already own the software and love it. At least that's what the poll says here. Looks like 48% of people have voted and 20% are here to learn how this might help them become a better trader and purchase the software. I gotta make this a little bigger to actually see what the rest of that is. Okay, great. Those of you who have been here before might notice my voice being a little bit different, and that's because I have a cold. It's not COVID, it's a cold. I tested myself, not that any of you can get my cold or whatever it is from through the ethernets, but hey, that's why my voice is the way that it is. I think it sounds good. I got my headphones on, listening to self-monitor, and I feel like I'm one of those morning talk show radio guys. 94.5 FM, coming to you live from Cincinnati. Welcome to the show. All right, I'm going to close this thing down. This is today's, I don't know, is it? Oh, I think this is yesterday's chart, actually. I just happened to, I wanted to load a pretty screensaver for the intro, and I happened to load it while I was looking at yesterday's chart. Here's today's. Look at that. You can make it fit with the mountains. There you go. Oh, it's perfect. It's all Fibonacci'd out. Oh, look, here we go. And you just expand it a little bit. Oh, it's perfect. See this is what happens when you trade full-time and also do webinars and talk to people all day about trading. You end up doing this kind of stuff, like, yeah, okay. Oh, I like the brown and the candles, all that goes together. It's a piece of work. Jake, maybe you should take a break. No breaks for this, Jake. So yeah, my official role at the company is the in-house pro trader, mentor, advanced training guy. So any of you existing customers can reach out to me if you'd like to schedule one-on-one mentorship meetings. Shoot me an email. I'm actually going to put it in the chat right now before we get started. We're still just getting started. JCOB at there you go. Shoot me an email and I can send you the info on how to book a session with me through the Back to the Future Trading website. All right. Curve fitting, yeah, exactly, Mike, yeah. Literally fitting curves and fitting my chart curves to the mountain curves. So what are we talking about today? How many people out there are not customers yet? Who doesn't own the software? I'm guessing a few of you don't actually own the software yet. Yeah, I'm not sure if anybody's had any experience in accidentally curve fitting their own backtests. I know I have, and that's after reading multiple books on how to trading psychology and the dangers of curve fitting. And it's funny how it will creep up, and I might not be aware of it for like 30 minutes or something, testing something, and I'm like, whoa, I was just curve fitting the last 30 minutes. I have to start over now, delete. So just even having that awareness as far as knowing how to backtest properly and catching yourself from curve fitting, I mean, that's a skill that I didn't even know I needed to have. I mean, that's the thing about trading. Like half the time, I think as traders, maybe more than half the time, we don't even know what we don't know, and we don't know what we need to know. It's by far, I feel like, the most challenging profession that I have ever endeavored to pursue. And that's why I love it so much, because it is such a challenge. It has been said that it's the hardest job in the world, and I immediately think, brain surgeon? Isn't that harder? I'm like, well, at least with brain surgery, you know, there's, I guess, I don't know, maybe fighter pilot, I don't know. Guess it just depends on how you look at things. So for anybody who's not a customer, who doesn't know what the heck's going on here, and you were sent over to this webinar from I don't know, who knows, Google ad or a snippet on YouTube or Facebook, or I mean, maybe a friend shot you the link or something. So what we're doing here is we're going to be going over some charts, and to see how well Tachyon TimeWarp, which is this institutional grade professional trading software, performed in the last 2 days, for Wednesday and Thursday. So on Monday, we actually sent out, by we, I mean Back to the Future Trading. I'm not a sales guy, I'm the mentor guy, but I will say we, since I am part of the company, in a sense. So we'd send out mass emails to, like, I don't know, it's like 4,000 people or something. Who knows how many people actually open the emails, but we do send out emails with the forecasted signals. And by signal, I don't mean trade, I just mean signal, for all of Wednesday and Thursday. And basically what that does is it makes it impossible for Back to the Future Trading to curve fit their predictions. If you can even curve fit a prediction, I guess you can. So yeah, that's what we're going to do here. We're going to explain why the software is what it is, and look at some charts and see how it did this week. And yeah, it is software that one has to pay for. And you know, in this world of trading, I don't see why wouldn't a trader have to pay for professional grade software? I mean, I'm over it. I don't use stochastics. I don't use MACDs. I don't use EMA crossovers. Get them away from me. Get those lagging indicators away from me. I don't want to talk about it. My little brother still trades with those, even though I do this. I can't. It baffles me. Baffles me. Like, dude, you got your older brother who does this. Like, he's the lead trainer. Like, and you still are so stuck in your ways that you can't see outside of your own box. Like, oh, I can teach you how to use the signals. Like, oh, I was stuck with his MACD crossovers. Not sure how many of you folks out there were like my brother and finally just like had enough and decided to spend some cash on a piece of software that the company, I mean, we're real people. You can actually talk to the owners on the phone. You can talk to Rachel. You can talk to Dave, the lead sales manager. Rachel's the general manager of the company, and you can set up actual screen-to-screen meetings with myself, and I'll actually answer the phone, text you back, email you. There's a lot of companies out there that would certainly not be the case, and by a lot, I mean like probably 99% of software development companies for the art of trading. So here we go. All right, slideshow. There's me. There's my dog up in Tahoe. Just like that picture because it reminds me that I don't have to be in Santa Barbara all the time. I could spend not a year, I wish it was a year, a month out of the year up in Tahoe and Truckee, skiing nut for probably the last 20 years, actually, as much as I can get. Lived in Winter Park, Colorado for anybody else from Colorado? Somebody is. Somebody just bought the software. Are you here? Is Ryan? I talked to Ryan, yeah, last week. He just bought the software. And yeah, we're talking about Colorado. I miss it. Okay, anyway, moving on. Right. So yeah, like I was saying, we're the only company online that gives the times and directions in advance. We give you the rules in advance and lets the times and setup pass. 2 days later, we can add up the results as a pass or fail, and that's what we're going to be going over later when we're looking at the charts. So my big thesis is that although the world looks messy and chaotic, if you translate it into the world of numbers and shapes, patterns emerge, and you start to understand why things are the way they are. I mean, with modern technology, this software, Tachyon TimeWarp, 12,000 lines of code, goes back into the historical data provided by the Ninjatrader platform and one of these high-end data feeds, Kinetic, Rhythmic, and the like, and it scours the historical data for a week, 2 weeks, a day, 21 days, 10 days, however long you want. It will scour that data for you, and it will find swing points and project them out into the future. It'll find the patterns for you. 12,000 lines of code. Ain't no joke. Ain't no joke. But this software does cost money, and I don't know. I mean, in trading, to me, it's a business, and if you're not willing to spend money on software, then I don't know why. I mean, just go out and say it. I don't know why you'd be trading if it's not a business. If it's a hobby, then maybe just stop trading. This is serious business as far as I'm concerned. People's marriages fall apart due to trading and loss of accounts. People die. This isn't just a bunch of numbers and shapes. Really, it's human beings, and it's drama. And there's a lot of stuff that can be amazing. The risk reward, a lot of stuff that can be amazing and change lives, and a lot of stuff that can ruin lives. So when it comes to the seriousness of trading, there was a day 2 years ago when I bought this software where I finally was like, I'm going to buy something, and I want to try to find the best company to buy something from. And this is where I landed 2 years ago as a customer. I've had this software for it can be 2 years in September, and every day I love it more and more. I learn new things, and actually stick with the trading plan. I have patience now. I didn't used to have patience. I mean, there's dots out into the future, and we know that at 11:21 there's a selling signal. At 11:15 there's a buying signal. We can know that up to a few days or even a week in advance, depending on how you have the settings. We know where those opportunities lie. I'm not saying everything's going to be perfect, absolutely not. But I know that I have to wait until X time to have a chance of going long or short, depending on how the pattern plays out on the way to the pattern. Okay, now I need to get back to the matter at hand. Okay. So yeah, when I look at a chart like this, I can see, I'm sure, everybody here, I wonder how much, I wonder how much combined experience all of us have together. There's 34 people here, maybe 36, depending on how I count some of there's like 2 doubled names. Thanks, by the way, for everybody showing up. I really appreciate it. It's really fun for me to do this with everybody. I don't even want to know how much experience all 33 or 35 of us have together. Even if you take 1 year each, that's 33 years. Guarantee you that most of us have 2, 3, 4, 5, maybe even like 10 years experience here. I'm sure that we can figure out all sorts of patterns based on this chart. Support, resistance, double tops, double bottoms, head and shoulders, cup and handles, teapot, urinals. Oh, excuse me, that's not a, wait, that's not a pattern. Oh, get it together, Jake. Have a drink. Oh man. Teapots. What's this guy talking about? He must be sick. He's loose. He's loose in the mind today, I'll tell you what. I mean, yeah, look at this little double bottom here, and then comes up and it consolidates, and then then it pushes up, and like this is a very angled head and shoulders. There's a shoulder, there's a head, consolidate, shoulder, drop. Oh, we can put a trend line here. We can measure the top of the head to the shoulder line, and then we can extrapolate that down, and we can bet that it's going to come right to about here. Oh, look, and then this impulse move down, and then consolidates to the up and then down, and then consolidates. Oh, that's another head and shoulders, and then we can measure that. That's cool. Why not be able, if you can combine knowledge of double tops, patterns, and stuff like that, flags, pennants, upside down roller coasters, but how do you know when the pattern's going to complete? Well, we don't ever know, but what I've figured out with this software is that, I don't even want to say what I've figured out. It's more like what I've learned or been shown to me, that these patterns tend to complete in areas where the TimeWarp signals are. It's really trippy. So at the top of this, I guess you could say right shoulder here, maybe we would see a blue dot and go, oh, well, I saw this head and shoulders, and then wow, there's a selling dot right here. Maybe now is the good time to sell that shoulder, or you could wait for a retracement to the shoulder line, and maybe that would be where the dot is. But I have more than just the chart now. I have these predictions of historical data out into the future. And yeah, this is a representation of the code, and this is, you know, a representation of where the software might have found these swing points, and where these swing points are repeating over and over again, enough so where the software puts these patterns out into the future. You can't even see them off chart unless you were to drag it in, and lo and behold, there are those swing points. You can't do this without this software. I mean, you could. It would take a long time. I mean, maybe not. I don't actually know. I mean, I certainly ain't gonna try. I'm a kind of guy who wants to, I would rather spend money on something and have it done right and be able to use my time doing something else, like playing with my 7-year-old daughter, instead of spending an extra 7 hours before the trading day begins determining where we might get swing points. I don't think so. I'm assuming a whole ton of you folks have read New Market Wizards and Market Wizards, and I believe there's another one as well. So with my experience, this is actually a quote that I would completely agree with. My experience with the 36 interviews conducted for this book and the others and its predecessor leaves me with little doubt that the random walk theory is wrong. I don't think the markets are random. There are random elements, but there are elements that are certainly not random. Otherwise, you know, how do profitable traders even exist? So yeah, this is just a little graphic on, you know, we send the emails out on Tuesday with the signals, and then we look at the signals for Wednesday and Thursday today, on Thursday at the end of the trading day. Yes, Richard, I actually am going to look at the 3-minute NQ in a little bit. It was a pretty choppy afternoon. Yes, I'm definitely going to look at that. I was looking at it earlier. And oh, the times on the charts that I will be showing, they are Pacific Standard Time. So my market, if you will, my time of the market open here in California is 6:30 a.m. So goes back to what I was saying earlier. There's signals that we'll be playing with in the very near future are raw information, and then I'm going to be going over my personal, one of my personal setup trade plans. We're not just going to be going dot to dot, although we can. I think that's what we did last week. That was kind of fun. We compared dot to dot results with my 3-position, 1 candle RVR method, the Royal Warp method, if you will, if I can coin that term for my strategy. I want to go over that. Okay, so there's a random distribution. Hopefully everybody agrees with this, especially you non-customers, and hopefully some of you non-customers will get on the boat with us and purchase software. You can talk to Dave at Dave. Maybe you want to post your contact information now, and then we can post it. Oh, nice. Jeez, he's so fast. How did he do that? Jeez, it's like he knew what I was. You heard his name. He's like, post. Dave, he likes to be called at 1 a.m. Eastern Standard Time, or 3:30 a.m. is a good time for him. Any time is a fine time to call Dave. Just kidding. But yeah, Dave seems to really love his job, and yeah, just give Dave a call if you have any questions on any salesy stuff. But so yeah, I've read this book, and by read I mean listen to it on audio, because I don't know why anybody would read a book if it's on audio, but I'm an audio guy. There's a random distribution between wins and losses for any given set of variables that defines an edge. This truth makes trading a probability or numbers game. When you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. As a result, your expectations will be in harmony with the possibilities. As a result, your expectations will be in harmony with the possibilities. So we're working with a probability game here. It's a probability game. I'm going to go over the 5 fundamental truths and the 7 principles of consistency, and then how many more charts? Oh yeah, we're almost done. Then we can start looking at charts. Mark Douglas is the godfather of trading psychology as far as I'm concerned. Anybody who has not read Trading in the Zone, please read Trading in the Zone, especially before you set up a meeting. If you'd like to set up a meeting with me as a mentor meeting. Oh, I got to take this thing off my head. It's one of those, I don't even know what to call them. It's like an electro brainwave stimulator device. I actually signed up to be a test subject for this company, and they sent me a bunch of them. Stick it on your head, and it gives you very light electrical impulses to sync your brain waves up into alpha state or something to that effect. Anyway, okay, moving on. The 5 fundamental truths of trading. Number 1, anything can happen. So I don't know if I'm going to take that trade. There's only 1 candle left before the next candle, and well, that EMA is looking a little weird. Anything can happen. Just take the trade. Commit. Number 2, you don't need to know what is going to happen next to make money. Absolutely not. You could put a monkey at a keyboard on the right day and just have him press a red button for sell and a green button for buy, and you can make money. You don't need to know what's going to happen next. You could also lose a lot of money, but you could make it. Number 3, there is a random, keyword there is random, a random distribution between wins and losses for any given set of variables that define an edge. What are we going to go over in a second? We're going to go over Jake's edge, that my edge with the backbone, the foundation of Tachyon TimeWarp. It's the simplest Tachyon TimeWarp trading strategy that I have. Yeah, because I'm not even taking patterns into consideration. So, number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. Are we going to see some losses on the charts that I'm about to show? Heck yes, we are. Heck yes, we are. We might even see, so I use a 1-to-1, a 2-to-1, and a runner position. So we might actually end up seeing more losses than we do wins. But at the end of the day, are we making money? It's highly doubtful that we'll see more losses than wins, but I don't know. I actually haven't back tested. We're going to look at the ES and the NQ and honestly have not back tested both days. I have no idea. I mean, they looked pretty good. Those are the markets that I trade the NASDAQ and the ES from time to time, and sometimes crude. 5, every moment in the market is unique. I like this little voice in my head saying, everybody's bored with these 5 fundamental truths, Jake. Get to the charts. Get to the charts. Honestly, these 5 fundamental truths and these 7 principles of consistency, I mean, I could just leave this up for 30 minutes straight and this up for 30 minutes straight, call the webinar done. Arguably more important than anything else are these 2 sets of lists. 7 principles of consistency. Number 1, I objectively identify my edge or edges. So when I was first learning how to trade, I didn't quite know what objectively meant. I would be talking to my brother about trading, and I would say things like, you know, when the MACDs pointed down, when the 50 EMAs pointed down, and then we get a big candle, a big selling candle, and then the next candle pulls back, and then the MACD crosses over and is also pointed down. Like, dude, what does pointed down mean? What are you doing? What does big candle mean? That's not objective enough. That's not quantifiable enough. So I've learned a lot. I've learned a lot in the last 5 years on how to objectively identify and create an edge. Number 2, I predefine the risk of every trade. I don't know how many people don't put their stop losses in at a defined place before the trade starts. I know that I used to be guilty of that. Number 3, I completely accept the risk, or I am willing to let go of the trade. Number 4, I act on my edges without reservation or hesitation. How many of us have problems with this? Number 4. Oops. I still have problems with this, especially after two full losses in a row. I mean, I can't help but hesitate a little bit, or at least premeditate a hesitation about my next trade. Like, oh, what if this one's a loser too? And that's always the one that's going to be the winner, right? Number 5, I pay myself as the market makes money available to me. So we're going to be doing that in this strategy. And that can always be improved, and we can ratchet up the detail on the stuff that we're going to be going over. But we're going to start real simple. Number 6, I continually monitor my susceptibility for making errors. There was a point, I should probably start doing it again, where I had a breathing meter, what was it? A pacing. I think it was called, it was an app on Android. They make it for Apple stuff as well. But basically it was a paced breathing app, and I had it set so my in-breath would be 5 seconds, and then there'd be like a little pause, and my out breath would be 7 seconds, and then there would be a 2-second pause, and then I would repeat, and I would literally just follow that pacer for the whole trading session and never stop for 2 hours straight. And that's when I started qualifying for Apex accounts, once I started syncing my breathing. And what that did is it I became much more aware of my susceptibility for making errors. So how do we get that awareness? There's a famous Randy Howell. I highly suggest everybody take a look at Randy Howell's website. Absolutely amazing. He's like I consider Randy Howell the in the field psychologist to Mark Douglas being the college professor of trading psychology. Mark Douglas gets in there and actually finds ways to fix us, to help us fix ourselves in as far as psychology goes. Number 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. Absolute necessity. I have these, both of these written down on 3x5 cards, handwritten on purpose. in front of me all the time on my trading desk every day. And yeah, now I have 4 funded Apex accounts. Even though I read this book 6 times, it wasn't until I took the Randy Howell psychology course did it all really start to sink in. And then that breath work really helped as well. But yeah, schedule a session with me, and I actually know a lot of that material now, so I could even help with trading psychology as well. Been meditating for 10 years, so I can help teach that too if you want to learn how to do that. This is over here. This is the first Apex account that I qualified for. That's in ticks, the equity curve. And then over here, more impressively, is Ron's Pro Trading Room equity curve using Tachyon TimeWarp software over the past, what is this, year? I think this is the year. Get in touch with Dave if anybody's more interested in backtesting results and stuff like that who is not a customer. Get in contact with Dave, and I think he has some files that he could probably send you. So we don't need that. Here's this playing field stacked against us as far as the banks and the institutions versus us, the retail traders. I think that picture speaks 1,000 words. Here is the violation tracker industry summary page that I screenshotted a month or 2 ago, and we probably know that these penalties are even larger now. I was talking to somebody last week, and they really enjoyed this shot that I added to the slideshow. Excuse me for a second. We're gonna get to charts in just a minute. That's better. Now I need a mint. All right, just look at those numbers. You think the government is gonna pull Bank of America's license to be a bank? No, because they're giving them too much money. The government's like, oh yeah, sweet. Oh, Bank of America basically stole money from citizens. Well, that's okay. They're going to give us a penalty money, and we'll put that into our coffers. And Bank of America makes more money stealing, if you will, from whoever than they do in the penalties that they pay. So the cycle just keeps turning over. Look at that, $36 billion, Chase. Really? Bank of America. When I look at that number, I just think, oh, I guess, well, who's the most corrupt bank that we got to deal with here in the U.S.? Oh, Bank of America. Who's next? Oh, J.P. Morgan. Which is interesting because there was that serious shenanigan BS that Wells Fargo was into. I think that was back in 2008. I made a little documentary on it. I actually didn't expect Bank of America to be that much more than Wells Fargo, but who knows? This is just what they found. Look at the total penalties since 2000. Goodness gracious. That's insane. $336 billion. Crazy. Oh, Michael said David is awesome. Thanks, Michael. For David. Yeah, Richard, yeah, every once in a while you get a frustrating day for sure. For sure. So yeah, the big money leaves big tracks. And that's what the software goes and looks for. It looks for those tracks in the sand, and then it postulates when those tracks might be repeated. Because of one of many reasons, but one reason is the big money follows routines. Business procedures, what are my favorite ones in here? International regulations, those all happen at certain times. I mean, FOMC days, there's so much scheduled stuff that goes on, and this is where, like, you know, it can really be helpful to understand the advanced patterns with this software, because the signals are an indication that the price could be up or could be down, but it makes a big difference a lot of times how the price action looks on the way to that signal. Yeah, scheduled phone calls, markets opening and closing, of course, payment receipts, fund rebalancing. There's filing deadlines. Each company has their own. If you trade something like the ES or NASDAQ, you get an aggregate or an average of all of those companies filing deadlines at any particular point in time. That's why I particularly like to trade the NASDAQ and the ES. If billions and trillions are moved in and out of the markets regularly, at those times we should see a trail. I don't feel like reading that. Those with the golden rule, there's 90% of traders. There's Goldman Sachs and the banks, etc. This is my own little personal thing that I added to the slideshow. I like the samurai analogy. It's a little bit more serious. I mean, that's pretty serious, but those people have lost their accounts. They're done. Maybe their marriage ended. Maybe somebody in their family lost it all, and I didn't want to get too morbid, but this is figurative, but also could be literal. This is no joke. And Goldman Sachs don't care. They'll just walk away, flick their sword. It's called shibari, by the way. If anybody cares to know, I do practice the art of samurai and iaido. So yeah, just flicks the blood off, a little shibari, and walks away, all relaxed. Thanks for your money, guys. Appreciate it. Well, I want to be on the side of the banks. I mean, it's a ruthless art that we are part of here. You know, if I'm having a winning day, that means somebody else is having a losing day, and that's just how it is. I'd rather be Goldman Sachs walking away. That's just fact of the matter. So yeah, I want to follow in the tracks of the banks, and that's what Back to the Future trading software helps us do. And you win battles by knowing the enemy's timing and using a timing which the enemy does not expect. Okay, I think that's enough of this stuff for now. Yeah, sweet. Okay, so let's pull up. Oh, now I lost it. There we go. NASDAQ. Let's get rid of that picture in the background so we can see things more clearly. Does anybody have any questions so far? Probably not. What should we do? Should we look at here? I like the 3 minute because that'll give us a bunch of signals. So let's go back and look at Wednesday. That's this day. Yeah, it was super trendy, right? On Wednesday. This is Wednesday, right? Let's just make sure. Wednesday, August 3rd. Yep, that's yesterday. Let me show you guys this, you folks, and there are some ladies there. Show you the settings that we got working with here. Standard settings. Swing is 8. Calendar days, 7. 14. These are the exact settings that got sent out in the emails. Volatility offset 1.5, 1.5, and we're not using patterns. We are using a 21 HMA, just like last week. I'm going to keep using that for a while. I don't want to change anything. The signals didn't really specify the EMA or HMA, but the main thing is these settings here, 714 calendar days, and swing indication is an 8. That is exactly this. Those are the exact settings from the emails. Bill, what indicators are at the bottom? ATR. Oh yeah, that's just ATR. I have the August bar timer on there. ADX is what I use to determine if the market is trending or not. It's very, very, very simple. I'm not going to incorporate this into the back test today, but there is a way that can be done. If the ADX is above this orange line, above 25, we can see that the orange line's at 25 here. If this yellow line is above this orange horizontal, then the market can be considered trending. If it's below, the market can be considered ranging. Very simple. A lot of people use ADX. It's native to Ninjatrader, and I have that on a 14 but we're not going to really be looking at that. And then ATR is the only other thing that I have. I like to see what the ATR was on the overnight and the pre-market, just to see what kind of possibilities we might be having. We don't need to look at that. Might as well just get rid of it all the way. As you can see, I've changed the candle colors because I like them. I'd like to see a chart on CL and RTY. Okay. Let's look at NASDAQ. I have no idea what CL or RTY looked like the last couple days. Okay. So I wish I knew how many people were customers. If you're not a customer, can you just say in the chat real quick, hey, I'm not a customer. I don't know what these blue dots mean. What the heck is a white dot? I'm going to come out here. I'm just going to do it because that's what we do. So I was talking about earlier, because people who don't have the software might end up watching the YouTube video of this, the recording that Rachel will post. Okay, so here's what the software does as the primary element of this software. As a starting point, white dots mean up, blue dots mean forecast price down. Up, down, up, down, up, down, up, down. It never repeats a white, it always oscillates. The signals always oscillate between white and blue. White and blue. Now, that doesn't mean that the price is just going to go shooting up right at this white dot. However, it does happen often in a freaky way. And you know, a lot of times the price will just shoot down at a blue dot. There are advanced ways to look at what a white dot can mean and what a blue dot can mean, but for the purposes of this webinar, we're just going to assume white means up and blue means down. So white means buy, blue means sell, selling window. I like to think of these as windows in time. So this would be a selling window, right? So from this blue dot here at 3:33 p.m. to 4:21 p.m. as a window in time where selling has been noticed by the software. And from 4:21 to 5 o'clock, buying has been picked up by the software. That's buying in the past. Higher prices. And then we oscillate to a very small selling window from just 5 to 5:03. It won't let me grab the green. Get it in here. And then we have a buying window. And then we have a selling window. And then we have, oops, a buying window. And up at 4:21, down at 5, up at 5:03. This must look crazy to people who don't have the software. Like, are you kidding me? There's no way this is gonna work. This is a bunch of, no, it's 12,000 lines of code and over a decade of research up to this point has, I mean, this software, like I was saying, I could make that my catchphrase, ain't no joke, ain't no joke. So that doesn't mean that that's what the price is actually going to do, but like these are windows in time where selling has been noticed and buying has been noticed. All right, so let me go over what the strategy. It's the same strategy that I teach every week. I'm just going to teach this strategy again. Does anybody have any questions on buying windows? Oh, Mike, you're not a customer? Mike and Michael. Okay, great. Thanks, guys. I appreciate you letting me know, so I don't feel like I just wasted my time with what the heck these dots mean. So you can also think about it. Sometimes it's helpful to visualize with triangles. I like to do this sometimes. So that can be kind of cool. All right. So let me show you the strategy that we're going to be working with. Let me start somewhere where it's pretty easy to deal with. Yeah, like at this 703, and then we'll go back and we can do some back testing. But let me teach the strategy. This is the simplest strategy that I teach. And yeah, like I said, if anybody wants to book a one-on-one with me through the website, that Back to Future website, then we can certainly do so. And then I have more detailed stuff that we can add to this strategy. Okay, 703. There's a buying window. And that I'm just literally just said buying window. Can I confuse anybody? Hey, Mike and Michael, are you confused yet? 703, there's a selling window. Blue dot, red, down. So this dot happened to work perfectly. And this is this today? This is today, right? Yeah, this is today. Okay, so right now we're concentrating on one thing. We're looking at this selling window from 703 to 748. 703, 748. What the heck is this? That, my friends, is called an OPL, otherwise known as an open price line. I'm going to do a Ron impersonation because I feel like my voice is really good for that right now. Right here is an open price line. This is an open price line. And up here we have this is a stop line right here, okay? All right, this is the selling window from 703 to 748 in time. Okay, Ron impersonation is over. So open price line. This line prints right at the close of the signal candle and never changes. Once it prints, it's static. This is called the dot price line. This dot and the line, as soon as the signal candle closes, this distance from here to here is 1.5 times the average true range of the last 7 bars. 1, 2, 3, 4, 5, 6, 7. So depending on how this thing will let me draw, it's about, this is an average, it's about the average of these bars from here, the close to the dot. That is considered the dot price line or the stop price line. So if we're doing dot to dot method, so there's a very simple way to trade this software, and that's simply selling at blue dots and buying at white dots. And it's pretty insane, Mike and Mike, how well that actually works. I'm not gonna lie, it's crazy. I've done 5, 6, I mean, geez, probably close to 6,000 individually back-tested dot-to-dot trades. I even hired, literally, when I got the software 2 years ago, literally hired an employee named George to train, and I trained him how to backtest it because I was so enamored and like with this software, like this can't possibly be. That I hired George. I ended up paying like $2,500 in labor hours to backtest 5,000 dot-to-dot trades with a few different settings. And it does work. Over time, you end up with a trader will end up with a positive equity curve. Hypothetically, of course, disclaimer, nothing's perfect. Don't sue me. So at 703, we could hypothetically, completely disregarding the 21 HMA, Michael uses a 120. A 120 works. I've been really in love with this 21 HMA as of late, so I'm gonna continue to use it. We could just sell here and buy here for 443 ticks on the NASDAQ and be done for the day. or you could continue trading. Now, this is not considering that not even caring about the EMA, a close below or whatever, just literally dot to dot. Pretend that this HMA or EMA or whatever the heck absolutely doesn't matter. So you could, I mean, we might as well, let's just do it. So let's go from pre-market, is 603. Here's where the market starts, everybody. I should put that in there. 630 is the market open. Let's build some stuff here. Market open. And but actually, while I'm in draw mode with the text tool, I'm just going to write a few things here. 1 second, bear with me. Target. Oops. Entry. Slow down. Okay. Let go. Let go. Let go of my drawing tool. There we go. Okay. Selling dot. Buying dot. Don't worry about this stuff over here. I'm gonna use this in a second. Market open. We'll keep that there. Okay, so our entry would be, if we're just selling, our entry would be from the 703, and then we would close that sell at 748. And if we're going dot to dot, I guess so the market open, I don't know, I mean, I guess you could say get in a short as soon as the market opens and take that loss. That's not what I would do, but you could. Like, oh, it's downtrending and oh, it says 603, then okay. We're going dot to dot, and then you could buy here at 648. That's a buying dot. Never hits the stop line. Remember this white dot for Mike and Michael. That's a break even. And then we could come over and we could buy at 748 at the white dot and sell. And then we could sell at 854. That would be a loss. Anything that's a loss, I put down at the bottom underneath the HMA. Right now, we're not considering that the HMA matters whatsoever for this current study. So we would buy at 921, sell at 933. That's a gain of 25. 933, we would sell, and we would exit the market at 1003 for 121. 1003, we buy. It's very, very, very rudimentary and simple. 1009, we do get stopped out. 1036, we buy for a loss, and then we sell at 11 for a gain of 68. 1115, another gainer. Sell, -3. Buy, sell. Oh no, we got stopped out on this one. Catch me if I mess up something, everybody. If I mess something up. 1242 does not hit our stop. That's a win. And 103, and then we would exit. Absolute latest I would stay in the market is to 127, which is 4:30 East Coast Standard Time. So just for fun, let's calculate up and then let's write that down somewhere. Where should I write that down? Oh, I know. Okay, so actually, you know what? Let's make it more fun. Let's do it like this. Let's do that. And let's do this. We'll just type it in as I go. So this will take commissions into consideration, the spreadsheet. and it's $5 a tick. We'll say that the commission's $5, and then we'll make that's just the Ryan Jones moving average method. So I'm going to put that super high so it doesn't take into effect. So this spreadsheet will just should just act like a regular old spreadsheet, but also including commissions. So let's go across and see what happens. It's just dot to dot on the NASDAQ for today. You would just buy at the, come on. There we go. Oh man. There she is. Everybody's still there. 38 people. Oh, hot dang. Michael, we are on today, Thursday. These forecasted times were provided in the email as well. So we're not going to look at anything besides today and yesterday, because there's no way for Back to the Future to trade to cheat on any of this. And by the way, the company, Michael, Ron, the two founders, like, they are some of the most honest, most amazing business owners that I have ever had the pleasure to interact with as a customer. And I truly do mean that. Remember, I'm not the sales guy. I don't care if you guys buy or sell, or I don't care what you do if you're not customers yet. I'm just telling you what my experience is as a customer. I can't envision a better company to work with as a retail trader to provide training and software. It's been a game changer. I actually get a little emotional just thinking about how much I love Michael and Ron and this company. That's why I agreed to do all this stuff, like webinars and whatnot. Okay, so let's see. Let's start at the top. How should we do this? I don't usually do it like this, but I think it's cool to use a spreadsheet. I'm gonna see if I can get the whole thing in. This will be fun. My margin's quite large on that side. That's why you can't see the candles there. Okay, so -1. Let's just go across the top and then we'll go across the bottom. -1. So even though it says -443, remember that all the flags are on the top are wins, all the flags are on the bottom are losses. This goes back to Mark Douglas's, do we know what our edge is? Do we have an edge? Do we have an edge? Does the software offer an edge for today's trading on the NASDAQ? Excuse me, notoriously crazy, psychotic market that can't possibly have any organization to it whatsoever. No repeatable patterns. The market's completely random. If any market's going to be random, it'll be the NASDAQ. I mean, who trades the NASDAQ? That's people who trade the NASDAQ. Hey, they're all a bunch of psychos. Oh wait, I trade the NASDAQ. Oops. Okay, -1 is not actually -1. That's a gain of +1 or a break even. 443, 266, 25, 121, 44. Is that working? Yeah. 66, 68, 20, 51. Okay, those are all of our wins. Wouldn't that be nice? Now I'm going to work back this direction. -86, -3, -56, -127, -17, -221. So it looks like we have a $3,800 day after commissions today on the NASDAQ if we just went dot to dot. And that's a good day. That's actually quite reasonable. I actually see that happen often. That's a really, really nice day, actually. There's the trades in wins and losses, you can see. It's pretty cool to see. Yeah, if you want to sign up for one of my mentor hours or multiple or whatever you want, I can show you how to use the intricacies of this exact spreadsheet as well. Yeah, this spreadsheet's invaluable. Here's your equity curve. Okay. Anybody have any questions on just the dot to dot? Either you new guys. See how I'm calling you new guys, even though you're not a customer yet. I'm still calling you new. Well, you're new to the webinar. Oh, excuse me. I just have to stretch my back. Okay. Michael's like, hey man, can you do the webinar? I was like, you only have to do an hour. I'm like, I can't just do an hour. I can't just do an hour. It's just not enough time. I think it's worth it, especially for new customers, for people who aren't customers yet, to hear that spiel in the beginning. It was for me. That really helped me pull the trigger. That slideshow, like, it really made sense to me. And then I saw some charts and I was like, okay, fine, whatever. I'll give it a shot. I'll give it a shot. I'll give this company a shot and hope for the best. And I did, and I never looked back. So that's pretty cool. That's pretty darn cool that that worked that well, dot to dot. Should we do another day, dot to dot? Yeah, intro's good. Thanks, Chris. I appreciate that. Sometimes I think I blab too much, but I mean, it takes like 35 minutes to go through all that stuff, and I think it's all really important. That was today. Let's go dot to dot, because we can do it real quick. Let's go dot to dot yesterday. Oh, I should meant, oh no, yeah, we're just going dot to dot. Because yesterday was more of a trend day, as we can see. So market open, 6:30 a.m. my time. So if we entered right at the market open, how do we do it over? Let me see. This is an example of that curve fitting. I'm aware of what I was about to do there. I want to see where I entered. Did I enter at the start of the 6:30 candle, or did I enter at the close of the 6:30 a.m. candle? So here, let's see. Let's get a little more detail. This is an example of that curve fitting. It's kind of hard to tell on this candle. Here's the market open. This is for today. So the market would have opened, this is the opening, this would be the opening candle. And the opening candle, the open of the opening candle would have been here, because this is an up bar. And this is the close. So do we enter the market? Because I don't trade like this. I wait for the first 10 minutes to pass and then I trade, but if we're doing dot to dot, so we would have entered at the open of the first 5-minute candle. This isn't the first 5-minute candle. It's actually this one. It gets a little confusing. Correct me if I'm wrong, but I think I'm on the right track. So this loss is 215, right? So this is actually 215 minus 215. So let's go back to the other day and make sure that we're doing that in line. So we're going to enter on the open of the first 5-minute candle. So that would be right here. Open of a 5-minute candle that is up, and then this is the close. Right? Okay, so open, and we're in a buying window. See this white line? That means we're in a buying window, and we exit at 654. And we sell at 654. And we get stopped out. And then we buy at 709. And we have a loss. Again, this isn't how I trade. I have no idea how this is going to work out. 718 sell. That's a win. 736 buy. 803 sell. Loss. 827. Small win. Well, small win relatively speaking. 918 sell. That's not going to be good. I could tell you already because we're trending so hard. 10-12, not stopped out. 10-33, sell. Small win. 11, buy. Sell. Small win. Put that up there. 11.06, sell. Stopped out. 11.33, buy. Small win. 12.53, sell. And then we exited the market at 30, at 4:30 over on that last day. So that would be this candle here. Let's put the crosshair on just to make sure. Sell. 30. Exit. 172. Okay, let's mark this one on the spreadsheet. See if we can get all of them in there. There you go. Okay, we'll go for the wins first. Want the good news or the bad news? 366, 35, 314, 45, 17. Oops. 17, 9, 26, 172 equals. Okay, and then remember this is our this is where we started our next day here. So this is our yesterday. Okay, now we're doing our losses. We'll start here and work our way back, just like last time. Minus 89, minus 146, 137, minus 137 again, crazy. Minus 189. Still made money. Still made money. Wow. Okay. So $3,900 today, dot to dot, and so 39 minus 63.15 was today. Oh, come on, calculator. 3910. Well, I guess we could do it the other way. 6315 minus 3910. 3910. 2,400. So this was a $2,400 day, hypothetically speaking, of course. What did I just say? 2,400. And then this was 3,900. And this is like results like this is why I hired George. I was like, this is fascinating. I want to just see how many back tests, like when are the, there's got to be weeks where it doesn't work like this, or days. I wonder what those days are, or weeks. Like what I have noticed, just for everybody listening, is that during the holidays is a good time not to trade warp. Just don't do it. Don't trade during the winter holidays. And by that, I mean the 2 weeks between New Year's. I'm not saying don't trade. I shouldn't have said it like that. I found, let me say it more properly. I found in my historical back testing that the results in the 2 weeks of the Christmas and New Year's holidays did not perform as well as other weeks in the year. So basically, so December 22, oh, nice. So you can just, I ain't touching warp from right here to right here. This will probably be the last day that I trade. Even that might not be that great. And basically, the reasoning being that warp loves volume. It really, really loves volume. And it loves it when the institutions and whatnot are at their desks doing their thing. So exactly, Mike. Yeah, institutions are off. Yep. Okay, so yeah, let me show you guys. Let me show you folks how I would trade. Oh, let's take a look at this real quick. So there's all of our wins on the top and losses on the bottom. That's pretty nice. It's pretty nice. There's our equity curve, hypothetical, $0 up to 10, and then a few losses down to 6,300 or so. Oh, well, we can't look at the equity curve like that because I didn't do the trades in order. So regardless, pretty cool. That's fine. Okay, so let's see if it's sometimes it could be considered unfair to compare my personal, one of my methods of trading these signals to dot since I'm using 3 positions. However, because I'm using 3 positions, that also could lead to 3 losses of the same caliber. So okay, let's see here. Let's go drawing tools, drawing objects. Just gonna do a bunch of deleting. Let's delete all these rulers. And all these. Apply. Hopefully that works. Nice, it does. Okay, so now we're gonna get into, I'll show you how I trade. This is the method that I use to qualify for one of my Apex accounts. I mean, pretty much to the T. I wanted to prove to myself and to the people that I teach and non-customers that an Apex account could be, an Apex combine could be passed by very simple methodology. Okay, let me just zoom in here. Shift gears in my concentration. Okay, so with my strategy, we're still looking at this this sell window here. We're going to sell, but we're not going to sell until the main part of my strategy is we're not going to sell right on the signal candle itself. We're going to wait to get a close below the open price line. Let me label this for you guys, for you folks. Okay, so here's your open price line. Let me zoom in even more, actually. Yeah, that looks good. Okay, let's get rid of that. That's a little confusing. So we need to, oh, come here, let me grab it. I'm gonna, hold on a second. I'm gonna save this workspace right now, just in case something happens. I wanna make sure that everything's saved. One sec. There we go. Okay, so again, open price line, selling window. I need a candle closing below the open price line to confirm that this is indeed going to be a shorting opportunity. I also need the 21 HMA to be in sync, the color to be in sync with my open price line, AKA, or my signal candle. So a blue dot, blue open price line with a white HMA, that doesn't work. I also would need, so I need just two things. Well, 3 things. 1, selling window. 2, open price line, candle closing below it. And then 3, the HMA to match the color. So our entry candle would not be this candle because the HMA here is still white. So what I'd be doing is I'm waiting to see the close of the next candle. We have factor well, we'll just call them factor 1 and 2. Factor 1, we do close below the open price line. Pathetic little close too. I mean, how many ticks is that? 9 ticks on a 3-minute chart. So it's pretty sad. It's a pretty sad close. It's not that great in confirming, but you know, quantitatively speaking, it does close below the open price line. So now we need the 21 HMA to turn blue. Oh wow, that one really looks good, and that closes below, but the HMA is not blue. I have my HMA set on to close per tick, so I can be watching it on candles like this to see when it might flip color. And I don't care about candles with the HMA because it's so fast and reacting. It's based off of recent price, the square root of the recent price. Very simply put, you can there's some videos explaining the theory behind HMAs, the whole moving average. Australian guy invented it, but it is so fast moving. And by fast moving, I mean quick to respond, very quick to respond. And because of that, I don't care that much about the open and close below. And actually, the one video that I watched, he was mentioning that, you know, a lot of people don't really use HMAs as support or resistance. They just use them to determine long-term, short-term, medium-term trend. So I'm not looking for this as like, oh, it's a 21 EMA can really be nice for support and resistance, but not the HMA. Anyway, this candle closes below, but the color didn't change yet. So that's still not our entry. Here, this candle closes below the open price line and below the HMA if we cared about that, but more importantly, it's blue. So we enter at the close of this candle, and then we enter 3 positions. All at the same time. I've actually got some feedback for some gentlemen that I've taught this strategy to on one-on-one meetings, and they're using it and they say that it's working, and I love hearing feedback like that. Entry, 3 positions. What's this, you say? This is a Fibonacci tool that I modified into a risk reward thingamajiggy. Our stop is going to go, if I'm using a 3-minute chart, I might have it 15 ticks above the wick. Let me zoom way in. I'm not going to place my stop right on that wick. I've seen it happen too often where the price will come right back to it. So the stop's actually going to go, we'll just call it 10 ticks on a 3-minute chart, 10 ticks. But I still pull my risk reward tool right to the wick of that candle. I just want a little bit of room for my stop line. Or if you're the kind of person who wants to put it right on the wick, put it right on the wick. But remember, there's 3 stops there. All 3 of them, all 3 stops. So we'll let's just put 3 stops there. So we'll just say that they're somewhere around there. And our target 1 is going to be this first line here. Our target 2 is going to be the second line. So we have a 1-to-1 and a 2-to-1 risk reward. 1 to 1, 1 to 2, or 2 to 1. As soon as the first target gets hit, then we move our remaining stop losses. So there'd be 2 of them. This one would be gone. This target would be hit. And we move those stop losses to break even. And we pray and hope that target 2 gets hit without taking us out at break even. The third position, in case you're wondering, that's the runner. We have no idea where that is going to end up yet. So it's somewhere away. Looks like target 2 does get hit here. I'm just going to extend this risk reward Fibonacci tool all the way out. This because this is a long signal. Let's squeeze back in now. And if you go to backtest this strategy on your preferred instrument and settings, make sure when you're backtesting to incorporate if the price hits target 1 and then comes back and takes your other 2 targets out, your other 2 positions out, because it will happen. It will happen in probably an annoying amount of times in trading and in backtesting, but I think it's still worth moving stops to break even at a certain point. Maybe you won't want to move your 3 stops to break even as soon as target 1 gets hit. Maybe you just move them halfway. That works. What if you just wanted to, like, oh, target 1 got hit, so we'll move our 2 stop losses halfway. We'll reduce our risk by half. And then when target 2 gets hit, then that will be gone. Then we'll move, and now we have all this distance to let our runner run, all this distance here. There's a lot of different ways you can manage that running position. But for all intents and purposes today, we're simply, I'm going to put our hypothetical stop losses back in here. Just going to copy and paste this one, which we started at 3. All intents and purposes today, and if you're backtesting, make sure to count these as 0 or +2, 3, or whatever your break-even strategy is, instead of counting them as winners. So as we can see here, our target 1 was hit. We did not pull back to our entry price, and we did hit target 2. And that's target 1, 111 ticks. This is pretty normal actually on the NASDAQ 3-minute. And then target 2. And I'm going to look at questions here in a second because I know there will be some. Or maybe not. Maybe I'm getting so good at explaining this that nobody will have a question. So our third position is running. So again, as soon as target 1 gets hit, that means we don't have this stop loss. That target's gone too. Both of these remaining position stop losses get moved to break even. Target 2 gets hit, ching, right there. And at that point, I do like to trail. So now we don't have this stop loss either. We have 1 stop loss left and we have 1 target and we don't know where that is. It's a runner. I do like to trail that runner by, I don't know how you would qualify this. So this is one, well, just to make it more simple, you could just start trailing that runner at the amount of the stop loss. So you could kind of ATR trail it, if you will, this way, if it kept going down. But there's a lot of different ways you can do that. We can go over that more in detail, depending on what kind of Apex account you have. We can talk about that if you want to schedule a one-on-one. So entry for that third position, where's it going to go? Comes max excursion out to here and then comes back and finishes right around where target 2 was. So that's what our first sell of the day looks like. Now, when the market opens, at the close of the market open candle, well, first of all, if we're using my strategy, we ain't trading these first 2 5-minute candles. I don't trade the first 5-minute. I don't trade the second 5-minute. I would trade the next one. But as we can see here, we're closed below the open price line, right? But our EMA is what, or our HMA rather, is white and pointed up. So we do not have confluence. We have conflicting signals. We're in a sell window from 603 to 648. Market opens. Second candle of the market. Oh, I'm sorry. I forgot we're on a 3-minute chart. Either way, 3, 6, 9, there's 9 minutes. So it's somewhere in here. I can't put, the Ninjatrader won't let me put the box between the 2 candles. So 3, 6, 9, it's 9 minutes, close enough to 10. I would not have sold or bought in this area whatsoever. And then we come to 648, and I'm going to go through a long tube. I just want to get these out of the way before we stop the stuff on the spreadsheet, because this is actually an interesting signal here. This is exactly what we don't trade, or what I should say what I don't trade. This 648 signal is a buying signal. Do we get a candle closing above the open price line at all? Nope. Our HMA is up though. So because we didn't get a candle closing above the open price line, we're not doing anything. And like, what is this? Just some nasty stop run just to go right back up again. Like, it's pretty cool. And for those of you who do have the software, we know that this is pattern 5. It's a brand new high at a white dot. I can hear Michael in the back of my head. Jake, don't talk about the patterns. That's too confusing. It's actually not that confusing for people who don't have the software. The software comes with a lot of training, and one of the patterns is an inversion of a white dot. The other one is an inversion of a blue dot. So basically, if you get a brand new high where there's supposed to be buying, a lot of times you'll see the price completely go in the opposite direction. The other most ingenious thing that I think, besides inventing the 12,000 lines of code and the hypothesis and philosophy around what this whole tachyon time warp trading software is, besides that, there's one other thing that I think is the most genius theory that Michael and Ron have come up with, and that is the pattern 4 and 5 theory. 4 and 5, 6 and 7, 8 and 9. You could arguably, if you understood the patterns, it could be argued that you could maybe do all this, like maybe profitably without the software. I don't know how that would work. I've never tried it, but it would be fun on sim. But I don't know. I don't know if you could, because like, who knows? What the heck is this? Oh, the trend's going up. Trend's going up. 648, bam, right back down. That's a pattern 5. We knew that. Oh, not only is it pattern 5. I'll go a little advanced with you folks. I mean, heck with it. Not only is this a pattern 5, which means down because we have this brand new high. Let me get rid of these. Yellow. Right here. Remember, we're not trading this first 10 minutes. We pop up from this brand new low, right? We can all agree this is a brand new low. I mean, definitely. And we go all the way up into this white dot. Well, that's an inversion of a white dot. If the price pushes all the way up, and then like don't expect that to keep going up, especially if you don't get a candle closing above the open price line. No, I mean, it's possible. It's not probable though. So we have a pattern 5 here, but we also have a pattern 9. A pattern 9 is 3 consecutive higher closes in a row on the way to a white dot. Here's a close. Here's a higher close. It's not much, but here's a higher close. We definitely have a higher wick. So 1, 2, 3, immediate reversal all the way down to 1.5 ATR stop to the tick. Oh man, I really just love this software, and I just love this stuff so much. I hope somebody wants to book a one-on-one with me, because I just love teaching too. I just love it. Okay, so no trade here. We never get a candle closing above the open price line. Okay, so let's find a trade. Here we have a buying window. Any questions? Okay, it's got an hour and a half going. I might go 2 hours today, just because. I mean, there's 34 people. Let me look at some questions real quick before I get on to the get on along. I noticed that last week you showed trading the 5-minute chart. This week is 3 minutes. Or indication of when to switch? No, I just I trade the 3-minute and the 5-minute. The 5-minute doesn't give as many signals. I figured it might be better to use a 3-minute and just oscillate between the two. If you find an indication on when to switch, that would be cool. You could literally just trade both of them to hedge. You could trade the 3-minute and the 5-minute, because there's so much distance between like the 3-minute signals on a swing 8 and the 5-minute, you could literally trade NASDAQ 3-minute and 5-minute simultaneously. The only thing gets a little complicated keeping track of your stops and your targets and stuff if you have multiple different charts trading the same exact instrument. I personally like the 3-minute better than the 1-minute. Yes, Michael. PVT, I'm not allowed to talk about that on this webinar because it's all about Warp. I don't want to use any other tools besides what Warp is, the software. Bill, plus price didn't close above the OPL. Yeah, exactly. It didn't close above this open price line. Here we got this candle for this sell. We got it closing below the open price line, but our HMA is not blue. Our HMA is white and trending up. Okay, so now we have a buy window at 748. Our HMA flips white here on this candle. So at the same time, we got HMA flipped to the white. And, oh, and our candle here closes above the open price line. So we're going to set up our risk reward exactly the same. So we'll enter right here at the close, and we'll pull our stop loss. Zoom in a little bit. Stop loss to the, I guess that's to the, is that to the wick? There it is. Right there. And remember, we're doing 10, 15 ticks. Our stop loss is going to be below that. But for the targets, I do like to make them exact. There's people that could probably argue with me like that's not proper to do that way. I'm just telling you how I do things. So again, entry. Whoa, what just happened there? Control C, Control V. Entry is here. Target 1. Target 2. Runner somewhere up here. So that runner, this runner from the last trade, closed there. Stop line is here. And most likely we're going to need to drag this way out. I think this is a larger signal. Longer, I should say. And yes, it's 3 positions. And honestly, with these 2 examples, that pretty much constitutes my simplest strategy, really. It's very quantitative. There's no gray areas that I can speak of, except for what happens if the candle right before the next candle, the signal candle rather, is the one that closes above or below the open price line. Just to simply answer that, it would be just take the darn trade. As long as there's one candle between, well, hopefully I'll be able to find an example before we end the webinar. I'll go to like 2 o'clock probably. Okay, so we got our stop lines. 3 stops. I think I got 20 more minutes left in me. 3 stops, 3 targets, 3 entries. So let's see what happens. Oh, target 1. I actually really don't know. I haven't looked at, I can't remember what these trades are. Target 1, our stop does, and here's a gray area that I've noticed in back testing. If you go to back this strategy, you'll find that you might not get a pullback to your entry, but when you go to trade this thing live, you might get stopped out at break even here. Actually, I think I took this trade, and this is the damn one that took me out at break even. So what I've started to do to match my, I guess that doesn't really make sense. When this candle closes, that's when I'm going to allow to move to break even, because there's a possibility that this candle opens here, closes here, but there's a possibility to hit the target, comes back down, takes my 2 stop losses out, and then reverses and goes back up and hits target 2, probably right here, almost hits it there. Doesn't hit it here. So I don't know how you'd back test that. Like the best way to back test this strategy would be on market replay, because of the move to break even thing. It can be a little tricky, but for all intents and purposes, as far as this webinar is concerned, we're going to just not count a stop out back to break even unless we see a wick come back and hit our break even line. We have to do something. So let's see, did that target get hit? See how precise we can get this. I think it did, because check this out. I had this way too low. I try to be as precise as I can with that. There's the wick right there. You can see it right there. And our stops are right here. Okay. So target 1 does get hit. Target 2 does get hit. And we're just putting everything right on the line. So for 100%, we are definitely moving our remaining stop to break even. These two are gone because we hit target 1 and 2, so stop lines. And then it looks like we get our runner taken out at break even right here. So usually I do like a +2 for the runner. Let's get this dragged out. Okay, so yeah, that works well for instructional purposes. And then you might wonder, like, oh, well, what if we get a close below the open price line, then it comes back up and closes back above it again? Well, I don't do that. It's like one trade per window. Then we get this push up into the 854 signal. Let's see if we got a candle closing below, but our HMA is still white. I don't think we ever even get a trade off that. So we never have color confluence, just to make it as simple as possible. With 921, we get a candle. Oh, this is a good example of not caring about if we're closing above or below the HMA. And if anybody does backtesting on this strategy and they find that it actually matters if the candle closes above or below the HMA, let me know. That'd be great. Got my email. So this candle does close above the open price line, and the HMA is white, so we will enter target 1. Now our remaining stops are moved to break even, and they're both taken out at break even. +2. Just gonna blast through a couple of these. 933, our HMA is white here, closes below, and we have a confluence of color. Entry, stop, target 1, target 2. Target 1. Definitely didn't take us out of break even as far as the candle wicks are concerned. Target 2. And we're running that runner all the way down to 1003. Let's put these little things in. Let's put these guys in line here. How's everybody doing? Yeah, everybody's still here. That's awesome. Please, most. Yeah. Okay, 1003. No close above the open price line. 1009, looking for a close below the open price line. Color change, nope. 1036, looking for a close above, nope, never happens. 11 o'clock, looking for a close below, there it is. Entry, stopped out. Waiting for that to happen. You gotta give me one stop out. And then of course it comes back down and hits our targets. 11:15, no confluence with the HMA. 11:21, this candle closes below the open price line, and the HMA is the correct color. Oh, stopped out. Small losses though, so that's good. Well, relatively speaking. And there's gonna be 3 of them. 11:45, looking for a close above. There it is. Market, enter. That's pretty good. Target 1. Target 1. Looking for target 2, doesn't happen. Close all positions flat at the sell signal. So that's closing the remaining 2. 12:09, we're almost done with this day. Looking for a close below the open price line, happens here. Almost stops us out. Does not though. Even if we played right on the line, it still doesn't stop us out. See that? Okay. This is one of those instant. Oh wait, I didn't have that as accurate as I'd like. Still not gonna stop us out though. There we go. Sell, and we're gonna close all positions flat. So we've sold 3 positions, 1 contract a piece, 20 contract a piece. However many contracts you want to put on each of those, I mean, that's entirely up to your account size, obviously. But either way, we're entering and we're closing all positions flat at the next signal candle. No questions asked. Although you might ask questions, I highly recommend just closing the darn trade at the next signal. Looking for a close above the open price line. We get it here, and we do not have color confluence here. We get color confluence here. So this is going to be our candle. This is going to be our candle of significance. So this is the candle. This candle closes above the open price line, but it doesn't flip the HMA. This candle does. So this candle right here determines our stop loss and our targets. Entry. And our next signal candle is coming right up too. This is a good example of what I was speaking about earlier. So we just exit all positions flat. I mean, shoot, got freaking 35 ticks out of that sucker. And 103, I mean, it's pretty much done for the day. No EMA flip. Yeah, we're done. There's no way I'm gonna be messing with that at 13.20. I mean, either way, it looks like it's about a break even anyway. So you get in on this candle and it'd be break even. So let's do some math on this one. And then I think I'm gonna have to maybe call it. So I'm getting tired. I think I'm doing a pretty good job though, even though I'm sick. I think it's been a pretty good webinar. Those brain patches, that's what it is. Brain patches really help. Give myself a little bit more room. There we go. Okay, so we'll just total these up. You see what I mean now? I don't know if it's exactly fair to compare my 3 position strategy with the dot to dot, but I guess in one way it kind of is fair because I could still lose 3 positions, right? Awesome. Well, thanks, Jerry. Appreciate it. Let me know if you want to book a one-on-one. I love my one-on-one meetings. Oh, and then I record the sessions too, so you can have that recording of our session forever, recorded on the Zoom cloud. Okay, so let's start here with our new day. Let's go this. I'll just go with a lighter gray, I guess. I'll just go no fill. Okay, so here's our start. Let's go with, let's start at the top here. 111 plus 221. 68. Stop me if I mess anything up. Okay, there's that section. We'll move this over. I'm just doing the winners right now. Okay, that should be all of them. So I'm just doing this section up here. 68, 69, 25. I don't know what that says under there. Probably 25. Oh yeah, this is that one that stopped all of us, or we closed all of our positions at 12:42. Oops. Oh. Where was I? 36? $70.36. Okay. We got these three trades. 68, 52, 69. 36, 36, 36. Oh, I did it again. Oh, I'm getting tired. See, this is what happens. Oh, that's twice. I literally just did the same thing. Getting tired. I need a nap. It's time for a nap. Let's see if I can do this. Not that hard, Jake. You can do it. 68, and then you got to push the little enter button. Oh, 52, 69, 25, 26, 27, 36, 36, 36. Just making sure those are all 36. Oh, well, one's 35, whatever. Okay, now let's do the losses, of which there are a few. Boom. Wow. Oh, it's freaking awesome. Really? This makes me really look like a rock star with this software this day. All of these back tests. I mean, I didn't cherry pick my strategy. I've been teaching this strategy every time I do a webinar. I've done 3, and this is my 3rd one in a row since Michael and Ron have been on their motorcycle trip, and then I've done a whole handful of bunches of other ones too that are on YouTube. So yeah, the only thing that maybe I've changed is a 21 each HMA, but I've been also doing that for the last 3 webinars. I mean, it doesn't make that much of a difference what EMA you pick. That's one thing that I figured out with George, the employees. You know, it does make a difference, but it's not going to make or break you because the signals themselves are that great. So let's see, minus 32, minus 30, minus 28. I'm doing it again. I'm really tired. Minus 32, minus 30, minus 28, minus 30, minus 32, minus 33. Is that all of them? I think that's all of them. What's the cost of the one-on-one? It's $150 an hour. And it's amazing what we can get done in an hour, by the way. Like, it's, and don't tell anybody, but I usually end up going a little bit longer than an hour. Oops, that's recorded. I'm not like super harsh with the hour. It's like, oh, it's 59 seconds, 59 seconds, 59, 3 seconds. Oh, sorry, got to close the meeting. You know, I don't want to leave people with, do I get all that right? That's insane. I'm not going to have energy to do much more than this. And then this, I got to call it after this. Let's look at it. Look at all those nice little chunky wins, man. Wow. Oh, I got to add some more data. Do I? How many? 69? Oh, no, it's good. There's our equity curve. Let's see what, so this is where our day started here. And we went down to here. So that's these are the numbers that we're working with. Let's do the math. And then I'm going to show you folks who don't have the software a couple things. Oh, nice. Awesome, Mike. We'll see you. Thanks for booking a session. We'll see you soon. What am I doing? Wake up, Jake. What are you doing? Oh, calculator. 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 Where is it? Where is it? Oh, I must have closed it. Calculate. Calculate it. We've got the geek calculated. Yeah, I'm definitely losing it. What are we doing? 14,255 minus the previous day's total, 63.15, 63.15, 79.40 using my simplest strategy. No patterns, only open price line closes above 79.40 on the NASDAQ E-mini futures. I think that's a good mic drop moment as far as charts are concerned. What time do you trade it? Yeah, so hello, I don't trade the first 10 minutes. And then you can trade it all day. A lot of times I'll just trade the morning session though. I'll just trade from 10 minutes after the open until, well, sometimes I'll trade the first 10 minutes. Most of the time I don't though. So we'll just say for all intents and purposes, from the open till noon Eastern Standard Time, till lunchtime. I don't want to trade during lunch because the volume dies down. Yeah, it's a, oh, and then another thing that, you know, I can teach on the one-on-ones, but I'll show a little bit of it, or I can just mention it here is, as soon as, let me find one that looks, oh, this is like our main one. So as soon as I enter on this candle, here's my entry candle, I'm gonna quick take a ruler and measure how long my stop is. So it's 108, and it's I'll right click on the stop loss tab, this right here on the chart, and then I'll immediately set up my auto trailing stop based on the 108, all in real time. So I can basically enter this trade, quick set up my ATM strategy on the working trade, and then just, I don't know, go have breakfast, because I know that my next signal is until 7:48, and the trade's just going to do what it's going to do. Like, maybe it'll be a winner, maybe it'll be a loser, I don't know. Gotta go take some breakfast and hope for the best, because as Mark Douglas would say, it's an edge. It's a game of probabilities. Okay, so let me show some closing document stuff here. So for those of you who don't have the software, I mean, if you're still here, cool. If not, I'm sure you'll probably, if I had to bet, you'd probably come back and watch the rest of this on the webinar recording. But damn, you guys are pretty much all still here, still 29 of you. Where is it? So this software, if you don't have it, can be purchased. Like almost everybody, all the 29 people on here, I mean, like 80% of them have bought the software and keep coming back to these webinars just for a sense of, I don't know, I imagine for a sense of community, to learn a couple more things here and there. I like this metaphor. Which one, if you just got a new job on a construction site, you don't know any of the rough, burly carpenter guys, and maybe you're an apprentice, and they tell you that you have to bring your own tools, got to bring your own hammer and your own tool belt, which is usually the case in construction. Am I gonna show up and am I gonna go to Home Depot and buy this $4 children's hammer and show up to that job site? And no, I'll get laughed off the job site, probably fired for just being a something. I want to show up with the best tool for the job. I want to show up on that job site, so like the new guy shows up and the guys are like, I want this blue hammer. Like, oh man, that's a cool hammer. Where'd you get that? Oh, what's up? Oh, hey, I'm Jake. So what do you guys need me to do today? I got this nice hammer, you know. So to me, the free oscillators and MACDs and any free indicator, the lagging indicators especially, might as well be showing up to a job site on our trading, a professional trader with this little kid's hammer. I want to buy, yeah, this hammer is going to be more expensive, but I don't care. I want the best tool for the job, period. I don't care if I have to spend some money and make an investment in my business, in my job. So that's why this software costs a couple bucks. So we have a serious choice to make. Free lagging indicators that 95% of losing retail traders use, or a one-of-a-kind professional institutional grade piece of trading software. And I've heard of people, a lot of people say, well, you know, I just need to do this one more thing, and then maybe I'll consider buying the software. And it's just, well, you know, once this happens, then maybe. And there's a little thing that I like to call opportunity cost. You might not even wake up tomorrow morning. Why not get the best trading software available on the market today, now? Start studying it tonight, and you could trade dot to dot tomorrow. You could literally watch an hour's worth, not even. You could just rewatch this stinking webinar. As somebody who has no idea what this software is, you could literally just watch this webinar. Skip the first 38 minutes. Just watch like an hour and 15 minutes of it and be ready to trade this thing tomorrow. No problem. I mean, unless you're very dense and I don't know, maybe you shouldn't be trading then. But so yeah, with the purchase, you get 2 lifetime licenses for 2 separate computers. So that's awesome. You can think about that as half price if you want for 2 different computers. You have free lifetime updates on the software. So anytime that there's a bug to fix, or there are like no bugs, like these guys, like they don't release something. And if they do, like they recall it really quick and then they fix it immediately. So I haven't seen a warp bug since I bought the software 2 years ago. But if there was, you know, you'd get it and you'd get an update as well. Free white glove installation. Rachel, the general manager, she will personally set up a meeting with you when you purchase, and she will actually set the software up on your machine for you, take your mouse and everything, and go through all of the settings and answer a fair amount of questions that you might have. And you also get a free video archive, extensive, basic to advanced. You have access to myself to set up mentorship, training, meetings, and yeah, I mean, you get a personal service basically with this company and this product. So if you use the limited promo code WARPOFF, WARPOFF, you can get $500 off of your purchase price. And then, yeah, like I was saying, one-on-one training with me. Just reach out to me for that. Let's see, where is the bucket going there, the price tag? When I first saw the price tag, I'm gonna put my contact info in here again. Dave, you want to slap your contact info in there again? Dave's the lead sales manager, and he would be happy to answer any questions that you have about the software, how to get it, what to do, pricing, stuff like that. I remember when I first saw the price of the software, I was like, what? No. And then immediately my brain was like, shut up, Jake. Shut up. You know what this can do. You know what you need to do. And I was like, okay, yeah, you're right. And I bought it. I never received a call from Dave or anybody. I just realized that it was something I really wanted. I wanted to give myself a present to myself. Back to the Future, by the way. Check out these reviews if you're a new customer. Are you watching the recording of this on YouTube, day, 2 months from now? Either way, take a minute and read some of these reviews on Trustpilot. These are real card carrying, receipt carrying customers. I know some of these people. Shoot, I'm one of them actually, somewhere on there. I wrote mine a long time ago. Oh, I think, yeah, I think he was on the webinar today. But yeah, there's 83 reviews. Somehow, Back to Future Trading has maintained a 5-star review rating. You know how hard it is to maintain a 5-star on anything? 5-star, like, that's the reason they've done it is because they're such a good company. They really are. Okay, so to buy the product, go to the product, backtofuturetrading.com. I'm going to put this in the chat. And if you're watching the recording on YouTube, I'm assuming that, what's going on here? I'm assuming that Rachel will have put the website and all that stuff on the thumbnail of the video recording. Why is, speaking of thumbnails, I didn't mean thumbnails, I mean the information page here. Let me figure out why my internet, hopefully everybody can still hear me. Why isn't that loading? I don't know. Product store. So you go to backtofuturetrading.com, internal service error, oh no. It's probably my, let me try to open up a new tab, it's probably my computer. Let's try a fresh tab. So you click the buy now button, throw in the code warp off, save 500 bucks. Oh, something's working, I think now. Maybe. Product store. I think it's my Google. Here, let me try Firefox. Not now. So do this. This whole webinar came. Get your dang on internets to work. Here we go. Well, either way, if I get my internet working or not, all I gotta do is call Dave or email Dave. You can call him at 727-742-2626. Yeah, I can't get it to work. Interesting. Oh, Dave's your man. Gotta call Davey. David Crockett, king of selling software, product storing. I can't get it working. I just ain't happening for some reason. I wonder if it's my cookies or something. I don't know. Bye, Mike. Bye, Emmanuel. Thanks, Michael. Oh, how annoying is that? I do the whole webinar and I can't get to the stinking. Dave, is yours? Can you pull up? I'm getting that. Fascinating. Huh. Oh. Hold on. Huh. So strange. Like, it's like I said thumbnail and like the thumbnails are doing this weird thing. But I got it to come up anyway. So click on the product store, then click on Tachyon TimeWarp. I'm in here now. Scroll all the way to the bottom. Read this stuff. It's actually pretty freaking cool. WD Gann, time is the most important factor in determining market movements, and by studying the past records of the averages of individual stocks, you will be able to prove for yourself that history does repeat and that by knowing the past, you can tell the future. WD Gann, arguably one of the, if not the greatest mind that trading mind that has ever walked the planet. As if minds can walk the planet. Yes, okay. So read some of that stuff if you want. It's really cool. And then scroll all the way down, and then you'll see the one-time purchase price of $24.95. And you know, if you can't afford $24.95, use the promo code. Then it's only $19.95. And I don't know. I run multiple businesses, and $2,000, $1,995 for software like this, 12,000 lines of code with support that are real people. Totally worth it. And it's not just the software, it's the edge too. It's the trading system. I mean, you could easily spend $10,000 on this, but we're talking $2K, like whatever. Invest it, learn how to use it, and start noticing drastic results in even just in your psychology. from knowing that I imagine that knowing for myself, I should speak for myself, knowing those future times of opportunity it's just been so beneficial for my patients. Yeah, it's weird clicking on the thumbnails. So there's also Ron's Pro Training Room. So Tuesdays, Wednesdays, and Thursdays, Ron, the co-owner of the company, sits down and trades and screen shares all of his trades using Tachyon TimeWarp to however many hundreds of people all at the same time. Everybody's watching. It's a great tool to start understanding patterns and Ron's knowledge base is extensive on a plethora of things. So you can proceed to check out without the Pro Training Room, or you can buy now, and there's a discounted rate per month of $149 for the month. So we'll just say we'll go without the Pro Training Room for a second. You can always call Dave about the Pro Training Room. Dave will be able to get you hooked up with that after the fact. You could talk to Dave. So click on the purchase agreement, and then we're going to make sure that the code works. Warp off, and don't forget, you get 2 licenses for 2 separate computers. Warp off, apply, $19.95. That's what did it for me. And then continue shopping, check out, PayPal later. Don't ask me what those are, the later thing. But yeah, I think we're good. It's nice that my house isn't burning down at the end of this webinar. Everything was fine, by the way, in case anybody cares. Literally had to end the last webinar with, okay, I think there's something burning in the other bedroom, and it was a cardboard box on top of a halogen light bulb, which I didn't put there, but I've since taken care of the problem and everything's fine. Anyway, buy now, call Dave, 727-742-2626, 727-742-2626, and reach out to me at Jacob, Jacob, at backtothefuturetrading.com if you'd like to schedule a one-on-one. Thanks, everybody. Really appreciate all of you sticking around, and have yourself a good Thursday evening, and happy trading tomorrow. I'm thinking about a new catchphrase. It's not even mine. Bob Ross. There are no mistakes in trading. This could be my own thing. I'm gonna combine it with Bob Ross. Let's try it. There are no mistakes in trading, only happy accidents.